Hey everyone, it's Chris from Axel as well as Celsius. You can find us on both websites, X, Instagram, as well as Discord. Remember, this video is for educational use. We're not a broker dealer. Past performance doesn't give us any indication of our future results. Use at your own risk. Let's go to the first slide that I have up here for the weekly video, and we're going to talk about what's coming up in December. So the first chart I have, I put the S&P 500, which is the Fortune 500 company. And what I wanted to do, you can use the SPY or the E-mini for the S&P, which is equivalent to the SPX. This is the large one. And I wanted to show last month, which is the October low, as well as the October high in relationship to the November high and the November low of 2025. You can see on the S&P 500, when we came back to this area, that was actually the JPAL announcement where we retested, we fell down, rallied up, came back in, we looked underneath below the October low in November and rallied back up. We had 5 days continuation with a small gap. I know Thursday and Friday was a long weekend, where Friday was a short session in relationship to the Thursday move, which happened in the overseas market, not in the US market. On light volume, we continued higher and we broke out of that downtrend channel on light volume. If there's going to be continuation, you got to pay attention to the 68.70 area in the SPX and the November highs. If there's going to be a reset, this was the 150% from last year's move. So pay attention to that area if it's going to consolidate or we fill the gap to continue higher in the coming month. And you can see that the S&P sectors, which are the 11 sectors in the S&P, have gained back, especially in consumer products. The biotech and the financials have done a little bit better than what the Nasdaq has done. Let's go to the next slide. And what I wanted to show you here is the 11 sectors in the S&P. Pay attention to XLV and XLY and XLP in relationship to the financial sector, the real estate, and the technology sector, which is XLK, and semiconductor is the SMH. The New York Composite represent the majority of the New York Composite, which are over 2,500. To the bond sector and the yield in relationship to the VIX, where the VIX has lost more than 28% of its value in the last week and a half, and the dollar, where it went above 100 now, it's just sitting right hovering underneath the 100 area. And we have small cap have gained quite a bit of range in last week, so we're going to pay attention to the Russell and as well Bitcoin and Ethereum. Let's go to the first. Remember, this was done on October 4th, 2025. I usually do different sectors as well as different equities and options to trade in relationship to those sectors. You can see here I put the Russell 2000, and you can see on the news that came out regarding interest rates and small cap companies as well as the tariff didn't have much effect. That was the October low and October high in relationship to the November high as well as the November low. You can see that the Russell gained quite a bit of ground and cleared this candle and this consolidation. You can see the September high, the October high and low, where there was a lot of consolidation here. We looked above, we failed on that big consolidation where the volume profile is, and we cleared it up. And I put a box here in relationship to the low box in October, as well as the October highs and the November highs of. That was the October high. You can see it here. That was still in October before we fell down, and that was the November high. You can see we gained quite a bit, more than 78% of the Russell 2000. Let's go, which is IWM, or E-mini, which is M2K or RTY. Let's go here to the Nasdaq 100. You can see in the Nasdaq 100, you can use the QQQ or the E-mini and Q_F. We can see that we had looked below here the profile of the October low, That was October, that was the November high and the low. We went under it, which got a clean bottom and rallied back up. We have this push up on light volume and we cleared that downtrend channel, but we have not been able to take out this area here. So we got to pay attention to that last 6 day consolidation where we had the gap up, create an island, which we filled this gap. We only have this gap up, and we still need to have continuation in the Nasdaq to get more momentum back up. And remember, there's going to be in the semiconductor as well as XLK, such as Apple, Amazon, Google, Meta, Microsoft, nvda, and Tesla. You got to look at these different companies, including Netflix, to see which are the movers and which are not the movers in the semiconductor and the technology, as well as using the AI open source or non-open source, such as Google or X and so on. So we're going to pay attention to these candles here. If we're going to come back, retest the F3 or the F6, which becomes, this is support, this is resistance. Usually I take my fibs from November high to the November low for the prior month market profile. So let's go to the next slide that I have up here. And what I did, I put the market profile on the Nasdaq 100. You can see in the prior month when we looked up, we kind of made two distribution. This is low volume here. If I zoom it up, you can see that there was low volume here. The value area high is in the gray area. The value area low is in the low area. And the point of control, this is where most volume is. And at the same time where the time spent high and the time spent low and the cumulative time is usually in green. We can see here on the profile when we did in the prior month high and low, we had two distributions and we are closing right underneath. If I zoom it back in, we are closing underneath that low volume and that gap. If there's going to be, this is the close on November 2025, where we closed, and where the open is usually marked with a baby blue color, and that's my open. So we are below, but if I take a look at the high and low on the profile, my time spent is above 50, so the sentiment should be bullish even on a reset back down. And these are the VPUCs, these purple lines, I usually mark them where the volume point of controls are. I did not mark them on the S&P, but I do have the S&P, so I wanted to show this on the profile on the Nasdaq. Let's go to the next slide. You can see here I have the S&P high and the low in last month, November, highs and lows. This is the prior months in October. This is the prior months in September. Whenever we have a clean bottom or a clean top or a poor high, I mark it because it's a flat top. When you have a clean bottom, you have a wick and the profile is thin, similar to the gap here, which is two distributions. So let's go back to the S&P, and you can see on the S&P, I did not marked where the value highs are or the value area lows are. Let's just bring it in a little bit more. You can see where the value high is, value low is, and the point of control in relationship where the close is. We are above the 78 in the 80% distribution, and we cleared that profile low volume from the prior month as well. So if I zoom in the market profile, can I continue higher? Yes, but if there's going to be small major resets in here, there's an opportunity from now till Christmas to find momentum to the upside in the S&P 500 and the different sectors. Last but not least, remember to check us out. We have changed the website on the server temporarily at solsticeatr.com. We are using Solstice axleatrai.com until everything is transferred over, but we do have axleatrai.com. If you need to learn a little bit more about what we do and how we can help you, get in contact with us. We're here to help. Let's go to the first slide on what I did. I put the E-mini S&P 500 on a 6-hour chart, and you can see I used the September 1st and I use 6-hour candle. This was the prior month low and the high. You can see it in relationship to the Fed announcement that happened here. When we came down, we wicked it lower. This one missed, we rallied, then we fell back down and we continued higher. We almost like a double bottom here and continued because we filled that area. Then we came back, retested it. We looked below and reverse sharply back up. The RSI, you can see, the peaks of the RSI. Eventually, we broke out of that downtrend, rallying up. We cleared the 38.2 fib, the 50, it consolidated in that overnight, and we continued higher. But on Thursday, Friday sessions were basically condensed due to light volume, and we pushed higher in an open con. But that downtrend channel that we had, we broke out of it. If we come back down to the 116, the 18 SMA or the 200 SMA for a bounce, that would be great. My 50 SMA is sitting at the 38.2 fib. You can see on the short term, the machine grabbed the low for the week, which was the prior week's Friday, and the high of this Friday short session. I would do my fibs from Sunday through Friday every week, and my monthly from the prior month high, which you can see on 11.2. This is the high, this is the low. And what I would do, I would get a Fibonacci. I would grab this high for the month and the low for the month. And this is my monthly Fibonacci measured move on the profile for the coming week. And if I want to change the status of it, I can edit the property and I can go one color to make it a little bit more simpler, and I will put it dull color. And this is my monthly measured move for the month in relationship to the weekly levels. And what I would do on the weekly levels, I would use this one. This is my weekly high. And my weekly low, which is Sunday, this is Monday's low, and that would be it. And I would mark it in a blue color, edit the property. You can see the extension 0 to minus 100, 100 to 200, and I would mark them in, just if you don't want these colors, you can mark them in a simple color, blue or cyan. That way you have your levels for the coming month for the profile, where we can, consolidate if we're going to get continuation to the upside. In the S&P, we look for the 180 to 200, or vice versa, coming back to 50 or 0 line and all the way to minus 80 to 100. We're going to trade what the charts offer us, not what we think. Let's go to the micro NQ. And the micro NQ on the daily instead of the way I have it here. We can go where the 6 hours are. Time frame, you can see here I have 9 through 11, and instead of that, we can do it on a daily chart. Push the daily chart, and you can see on the daily, I'm going to do it for a 1 year, just to kind of compress it and show you when there's momentum to the downside. The thermal is actually falling sharply on the RSI down to the 20 and 15 area, and we would get overextended, and there's going to be continuation. And if it lingers, usually it sits above the 80% to 85% on the RSI. But you can see when we created higher highs here, the RSI was diverging to the downtrend, and we eventually broke through that downtrend channel to the upside and above the 50 on the daily on the Nasdaq 100. So if I zoom in here and I look at my monthly high, this is what? 11.2. So if I'm going to go get the measurements for the week, this is my weekly highs and lows for the week of this. If you go down here, that's 11.21. So this is my weekly highs and low for the week on the on the Nasdaq 100. But what I want to do is break it down from here, from the highs to the lows, to show you that Fibonacci, that it took the highs and lows for the whole 2 months, showing you the fibs. But what I would do for the Fibonacci's, I usually take the monthly levels for the monkey bars in relationship to that, and I would change the colors. If you want to keep them that color, you can. You can see where we looked underneath this area and the gap and rallied back up. So on the 30-day 6 hours, what I would do in order for me to get the measurements, I'll take the Sunday through Friday highs and lows, and that would be my weekly highs and lows for the week. And I'll edit the property once again to show you how to do this. We can color it blue or cyan, and you can see where the highs and lows for the week are in relationship to the extensions to the upside or the downside, in case there's a little bit more volatility. Let's go now back to the daily chart. And what we're going to do, take a look at Bitcoin, micro BT. And we can see in the micro BT, after that vicious turn from the 123, 124, where I called there's going to be a short, and I said if we end up losing the 104, 128, we can continue back down to the 75,000 and 80,000. We tested the 80,000 right here, and we kind of rallied back up because there was so much sell-off on the thermal, and basically that momentum was very sharply dropped. We tested the 92 area, 93 1,500. You can see on that candle the high was 93,645 on the weekly chart. If I did the measurements, that was basically a Fibonacci and an extension to the upside, and we rejected on the backside of that downtrend channel that we broke down from. We retested it, looked above. There's the 18 SMA. Even if we're going to consolidate and create a cup here in order to continue to F3, and that would be a little bit of resistance up in the 100. You can see that marking on that yellow line. That would be about 100,000. 124. That would be basically where I think we're going to find resistance. But before we get up there, pay attention if there's going to be consolidation here for a rounded cup, or we're going to clear the 18 in order to get to the backside of that downtrend channel to get to F3. So we trade what the charts offer us. You can see that the RSI has reached the 38.2 fib from that move up from high to low. So if I'm going to look at this on a weekly basis, what I want to do, go to the 30-day range. And what I would do, this was last week's range from Friday through Sunday. I would take the highs of the week and Sunday's low for the week. And if I'm going to get the extensions, I'm going to look for the 180 to 200, which is the backside of the 99,205 and 100,000. 124 should act as a little bit of resistance, and that's your 116 SMA on the up extension. If I'm going to fall back, I'm paying attention to the 50% of that weekly measured move, or the 38.2, to find support in order to, there's going to be continuation in Bitcoin. Similar to Ethereum, I can show you Ethereum. And we'll do the Magnificent 7 and we'll finish from it. You can see I have all these sectors here on the Magnificent 7 and everything. Oh, I do have Ethereum here. That has a lot of noise on it. Let's check ET so that way I don't complicate it for people. You can see on the downtrend channel, if I take the highs from here all the way down, we just broke by time instead of by price. We can take this high here to this low here. You can see it. And we eventually broke by time due to the holidays here because it didn't trade in the U.S. market on Thursday, but Friday was a short session week. So we pushed up a little bit on time. We are closing on that 6 hour or 4 hour above the 50 SMA and the 18 simple moving average. If there's going to be continuation, this bar candle and the backside of this consolidation down here would be, catching up with the 116 SMA on Ethereum. So that's Ethereum. That's last, but before we finish, let's go to the Magnificent 7. I have included in there Netflix. You can see Nasdaq 100 here. You can see mega Nasdaq 100. The Nasdaq 100 did 0.48%. You can see Apple, Amazon, Google, which is Alphabet, a little bit was neutral between Google and Google. You can see the Meta rallied up. Microsoft rallied. Netflix, Meta, due to the noise between nvda using the different AMD chips and so on, or avgo. And you can see Netflix after the split 1.3%, and nvda having a little bit of issues at the lows right now. This is the Magnificent 7, including Netflix. And what I want to do, show you it on daily basis. You can see that nice reversal from the 116 coming back to the 61.8 on the daily from high to low and close right on it. So if I remove this and I put, I want to show you just the Google NVDA. You can see if I zoom it in here, is there a possibility there is weakness in NVDA? If there's going to be continuation, you got to look for F3. If there's going to be losing the 116 SMA and the backside, I would look for around the 152, 155 area, which will catch up with the 200 SMA right here, because I don't know if the 116 going to hold it between the 116 and the 200. There's a midterm, medium fan or a moving average right in the middle of it. So you can, you can take the 116 plus the 200, add them up, divide by 2, and you get a moving average right in the center of those two. That way you know what it is. So I think there's a little bit more weakness in NVDA. And let me show you Google. Oops. You can see in Google there's quite a bit of movement after the earning report, and that gap we rallied quite a bit. We are in consolidation. We do have this island reversal here, even coming back on Google down here, or the catching up with the 18 SMA would be much better position, opening a position right there. If you are long, from down here, that's fine, in the breakout of it. But if not, if you're looking for an opportunity to look for this gap in the backside of the 18 SMA, that will catch up in Google. Let's take a look at the avgo, and I'll finish up with the S&P 500. avgo. You can see avgo on the platform, it's priced quite a bit. A lot of people cannot afford to trade these you can trade them in the options. You can see that big move, after Friday, you got 5 days rallying continuation straight up. So pay attention to the 100. That's actually a 200% fib up from the prior year's range on avgo. Let's take a look at the micro ES back in. Let's put the micro ES, and you can see in the micro ES one more time. I wanted to show this so everyone can see it. I put those fibs up to show you the ranges. You can see last month's range, the low and high, in relationship to where we are. We're above the 78. We are in the 80% range. If there's going to be continuation, you look for the upside of this support. If it creates a right shoulder in order to continue higher, or there's going to be a run-up continuation. If there isn't, you look for the backside of the move at the 38.2 or the 61.8 to find the 18 SMA and the 50 to catch up in order to continue higher. So we're going to trade what we see, not what we think. And once again, I'm going to remove this Fibonacci so you can see it a little bit more condensed in a cleaner way on the side of that move after looking below these two and rallying back up. So trade what the charts offer you, not what you think. And I hope this video was very helpful. If you have any question, once again, get in contact with us at solstice.axel.com, or get in contact with us at the following number, 949-414-8484, if you want to learn about market profile, support and resistance, divergence and momentum indicators, and retracements, and understanding gaps. We're here to help. Take care. Over and out. Enjoy your weekend. See you on Monday.